Let's take a look now at how the markets, or rather get analysis on the markets and their performance for today. That's with Burgess, Portfolio Manager at Nedbank Private Wealth. Carl, always a pleasure to speak to you.
Good to see you.
I like your muted colours. You're matching with the market. Muted performance, right, for what we've seen for the month of June?
Yeah, for the whole year, in fact, unfortunately.
Exactly, and even over the last 3 years, Aussie actually hasn't done anything. So investors are slightly uncomfortable, but I'm sure there's some areas where there's some green shoots in performance.
Yeah, I think you have to have a look at the markets in general. Over the last 3 years, as you mentioned, not really going anywhere, which is not great. I mean, at the end of the day, if you're investing in the South African equity market, you're investing in an emerging market, and you'd like to be rewarded for the risk that you're taking in that market. So not great if you are investing in it, but I think there are some opportunities. I think if you look locally, we're going into now the close of this quarter, which I think is next week, with a high likelihood that it'll be negative, that we'll see some negative GDP growth out of that. So that'll give us probably 3 quarters of negative GDP growth in a row, which is not fantastic. And then there's commodity prices like oil and iron ore. Oil has come off 20%. Iron ore's probably halved in value this year, which is not great. So if you're a miner, not fantastic. And then, of course, you've got the mining charter to deal with. So I think having a look at it, there are like spots of value, but you need to be quite astute to spot them, I think.
It's interesting you mentioned the resource space because, just a year ago, 2016 was one of the best performing years for resource and mining companies, given that dynamics clearly weren't as volatile. So must make your job and that of your peers as well in the industry a lot more tricky in really finding those opportunities of value. Yeah,
I think so. And, it's quite misleading that the all shares done next to nothing for the last 3 years, because within that there's huge moves that have happened. So if you look at industrials, resources, retailers, there's massive moves within that. So it's just different sectors kind of interchanging gains and losses over the last 3 years. So as an investor with a diversified portfolio, you would have certainly had some grey hairs, I think, by this point because of the big sways in value. But I think looking at resources specifically, I think if you looked at it at the beginning of last year, resources had done particularly well. At the beginning of this year, resources had done particularly well. And I think if you looked at iron ore in general, it probably was a bit overvalued. If you have a look at on the demand side of it, there wasn't that huge amount of demand that you wanted to see to support that price. There was a lot of speculative buying that was happening in the iron ore market in China in terms of iron ore contracts, which contributed to that sort of inflated price. So that coming back in line, and I think we might see some more sideways movement from resources more than anything over the next couple of years.
What about industrials? And I know Naspers has always been one which gets investors, either on either side of the fence, but most people buy it because of the value that it's been able to generate.
Yeah, certainly. So, and that's really come from Tencent largely, which has been fantastic. And I think it does make up a huge part of the market. That together with Richemont, I think together they're about 1.5 trillion or 1.6 trillion in terms of their market caps. So yeah, I still quite like Naspers. We're watching it quite closely. There's been a bit of a pullback in price, so I think it will start looking attractive again in a pretty unattractive market. I think Naspers is probably one to keep your eye on.
But it's expensive, Kyle.
Well, it depends how you look at it. So I think if you look at Tencent at the moment, so if you look at it over the last year, and there's been various articles and guys talking about it this week, but in terms of what you're buying outside of Tencent, you're actually getting that for free. If not for free, it's a negative value at the moment. So we like that value in Naspers outside of Tencent as well, and I think that's what makes it attractive. So if you look at it from a 2,700 or 2,600 rand per share, of course that's a lot, but
and the price earnings ratio too, right?
Yeah, absolutely.
Yeah.
But we still think that there's certainly value in it.
Some value in Naspers there. Yeah. What about Brait? We've recently seen this share price coming under some pressure.
Yeah, so I think that's one of the things that we have seen. So while industrials have done generally reasonably well, guys like Brait haven't done very well at all. So we've seen that share price come under huge pressure. And I think if you look at it at present, it broke below 60 rand yesterday, and I think would have had a lot of guys, their eyes would have been watering at this stage. But if you have a look at it, that's pretty much valuing New Look at zero. So that puts their sort of NAV at around 60 rand. And if you look at a typical investment holding company and you apply a bit of a discount to that, you could be looking at some more sort of downward movements, which is, I don't want to say that because we quite like the stock, but I think there's certainly some issues with New Look. But you've got to kind of keep your eye on the expansion into China and hope that comes to fruition, and management can execute their plans on that.
59 Rand a piece, as we saw on the chart there on screen. But you mentioned New Look, and automatically the first thing that comes to mind is what's happening with the UK, and Brexit talks officially kicked off this week, and of course some security concerns there, because that's something that's beyond the company's control too.
No, certainly, and I think the big theme really that's coming through there is uncertainty, and like we've seen in South Africa with mining charter policy uncertainty, markets don't like that, investors don't like that. So if anything, it's contributing negatively to markets. But that being said, we're a year down the road, and we've got until the 29th of March, I think it is, 2019, for them to put together a framework for a way forward in terms of Brexit. So I think it's a very complicated deal. I don't know too much about it, but I think it would be exceptionally complicated to try and untangle all of that.
Let's talk oil price for a moment. $45, $46 per barrel, and it's actually quite interesting to see how the dynamics have unfolded, because the last update I recall seeing from OPEC was that they agreed to cut back on supply, even though there's some states that haven't come to participate just yet.
Yeah, so the oil price has been quite difficult. I think what you are seeing is that what it really comes to is that I think the Saudis and the bigger players in OPEC need to cut back more to have a real impact on the actual price of the oil or per barrel price. And I think even with the US, you've seen Hurricane Cindy, I think it is, that's taken out it's close to 20% of production on the Gulf there. You'd think that would have more of an impact, but what we are seeing is that shale producers in the US can be very competitive at a price below $50 a barrel, which I think will have some of the bigger oil producers quite worried at this stage. So that's not a good space.
It's been a tough couple of months, not only for South African investors but from a global perspective. What are your expectations for the market performance and stocks that we might need to keep our eyes out for over the next 6 months of the year?
So I think, speaking from a South African perspective, I'd be quite keen to keep my eye on some rand hedges. I think over the last sort of 6 to 8 months, we've probably seen some quite speculative moves in the bond market, with those flows with bond investors buying into our bonds. But like I said, they are quite speculative, so you could probably see some big moves on the rand, and I'd like to be invested in rand hedges given that. And then with the backdrop of negative GDP growth in South Africa, 2 quarters in a row at the moment, so we're officially in recession. And the amount of uncertainty going forward in the next 6 months, I don't think, while there are bargains to be had in the South African market, I'd rather be looking at rand hedges, and more specifically your larger cap rand hedges. So something like Naspers, an Aspen, for instance, we quite like that.
Fantastic. We'll leave it there for today, Carl. Always a pleasure speaking to you. That was Carl Burgess, Portfolio Manager at Nedbank Private Wealth, updating us on the market dynamics that we've seen over the last not only week, but also last couple of months. But stay with us. When we come back from the break, we take a look at the banking environment in Botswana with Reinette van der Merwe, who's the CEO of Barclays Bank in Botswana.